Gold climbed 1% on Monday on fears of an escalation of the U.S.-China trade war. And will more fear be seen in the markets? Joining me today, Peter Hug, Global Trading Director over at Kitco Metals. Pete, good to have you back on.
It's good to be here, Danny.
Yeah, well, renewed trade wars provided the short-term technical bounce that gold needed. And you had mentioned this before, but is this still enough to start a new uptrend for the metal here, Pete?
Well, we remain constructive based on our last conversation that we had. That we went long the gold trade at the 200-day moving average around the 1268 level. And we are still on that position. We had a stop at 1275. We've got gold north of 1300 on the cash market right now, but from a technical perspective, I needed to close over 1302.50. That's the 100-day moving average. If we can get it through that level on a close basis, I think the 1312 level is definitely in the cards. And then if we get through there, we're back up around the 1320 area. That said, as things can change very quickly depending on the president's mood, we're going to raise our stops on this long position from the 1275 level to 1292. And if it closes below 1292 on a close basis, we'll be out of the trade. But for right now, we're still constructive. This market, we think the equity market, although there might be a bit of reprieve by the close today, still think it's going to be under pressure until we get some of these issues with China. And then also in the next 3 days, potential tariffs on the European car industry is coming into focus. So there's a number of factors in the immediate term that is going to create some anxiety in the market, and in that context, we remain constructive, the gold price.
Well, Pete, we saw gold, as you mentioned, gain $12 about today, but why hasn't silver responded? Usually we see silver following gold's lead here, but silver remaining flat on the news.
Well, if you look at silver in the context, not in relationship to gold, but more in the context in relationship to the industrial metals, platinum and palladium, they've all been under pressure recently, and that's primarily because of the anticipation of a global slowdown, and what that will cause will be less demand for the industrial metals. So silver is sort of being punished because it's in that group. But I think if gold does finally get over 1302.50 and start to create some legs, silver's going to catch up fairly quickly, and can move $1 in very short order, at least to get back up, to maybe an 82-to-1 ratio to gold. But currently, it is being sort of buffeted by the anticipation of slower economic growth and supply-demand issues related to silver specifically.
So on a technical basis, Pete, let me ask you, which of the metals, and including the PGMs here, do you see as having the best short-term potential?
Given the current state of sort of the macro picture that I'm looking at right now, I still consider gold the best performer short-term. If there were to be a reversal in sort of the rhetoric re-China, and ideally, the tariffs don't go to 25% and stay at 10%, I would be then much more aggressively inclined towards metals such as palladium and platinum that do have structural supply deficits for the balance of this year, and from what we're seeing, anticipated supply deficits right through 2020. So in an environment where the global economic picture starts to look better than it does currently, I would still be more inclined to be on the PGM side of the trades here from a return perspective relative gold.
All right. Thank you, Pete. Anytime I get you to stop and think, I know it's a good day. Thank you so much for joining us.
You're welcome. It was nice being here.
And thanks for watching. We will be back tomorrow.